Good afternoon, everyone. I'm Inki Cho, Senior Financial Market Strategist at XNS, and this is your weekly market outlook for November 26th, 2024. After much debate, President Trump appointed Scott Bessent as U.S. Treasury Secretary. This key position influences tariff policies, regulations, and financial decisions, making Bessent's appointment significant for investors. Bessent, who opposes extreme tariff policies, alleviated some market concerns that arose during Trump's election. He proposed a 3-3-3 policy to reduce the fiscal deficit to 3% of GDP by 2028, promote 3% GDP growth through deregulation, and increase energy production by 3 million barrels per day. Bessent also suggested that tariff policies could be negotiated to ease tensions between countries. After Bessent's appointment, the 10-year Treasury yields dropped significantly as concerns about the fiscal deficit eased somehow. Fears that the Trump administration's policy would raise inflation and fiscal deficit had previously driven the yields up. However, these concerns lessened with Bessent's nomination as Treasury Secretary, leading to a decrease in long-term yields that pleased market participants and accelerated gains in the U.S. stock market. As long-term yields falls and a positive outlook on the U.S. economy persists, Wall Street maintains a positive outlook on the U.S. stock market. Goldman Sachs forecasts the S&P 500 index could reach 6,200 by year's end, driven by rising enthusiasm among individual investors and increased corporate buybacks. Fundstrat also anticipates a Thanksgiving rally, projecting the index to rise to 6,100 by the 29th of this week. This optimism stems from expectations of economic recovery after Trump's election, potential Fed's rate cuts, and Nvidia's strong performance. Nvidia reported strong third quarter results with sales up 94% yearly and profits nearly doubling. As a result, Wall Street institutions raised their target prices. Goldman Sachs from $150 to $165, Morgan Stanley from $160 to $168, and JP Morgan from $155 to $157. Despite this positive outlook, Nvidia's stock price has declined since the earnings announcement due to fourth quarter guidance falling short of expectations. While Wall Street anticipated earnings of over $40 billion in Q4, Nvidia projected around $37.5 billion. With Trump's election, markets are now concentrating on future inflation in the U.S. As inflationary pressures may rise, it could prompt a shift in the Fed's rate reduction path. The U.S. CPI has increased by 0.3% monthly for 3 consecutive months since last August, while the inflation expectations over the next 5 to 10 years has climbed to 3.2%, well above the Fed's 2% target. Attention should be on the October PCE price index, which is expected to show a 0.3% rise from the previous month and a 2.8% increase yearly, which is the largest since last April. This potential inflation resurgence could hinder the Fed's plans for further rate cuts. The market's expectations for a future rate cut by the Fed is declining gradually. A 25 BP rate cut is still anticipated in December, but Wall Street is more focused on the interest rate outlook for next year. According to FedWatch, there is a 41.9% chance that rates will remain unchanged after December's cut, with a 14% probability of maintaining the current rate without a cut in December, up from 2.3% a month ago. Carefully review the above data before proceeding with successful trading. This is the end of the market outlook for the 26th of November 2024. I'm Inki Cho, the Senior Financial Market Strategist at XNS. Thank you.